Analysts say new job market figures mean lower interest rates are on the way. Job advertisements fell during the peak spending month of December, pointing to tougher times ahead for those seeking work. At the same time, it'll be tougher for banks as credit rating downgrades in Europe add to the cost of money. Here's finance correspondent Philip Lasker.
This is where the work is, exporting Australia's resources wealth to the world. But there aren't enough jobs to replace those being lost.
The strength in the resource-rich states is being overwhelmed by the weakness in some of these larger states.
Big employers like retailers are struggling in the larger states where this is becoming a more common sight. Job ad numbers compiled by ANZ, which is also shedding hundreds of jobs, show ads fell in December. They're also down over the year. It would have been worse if not for reconstruction jobs in Queensland and a strong pickup in the resource-rich Northern Territory. But overall, ANZ is expecting the unemployment rate to rise.
It's around 5.2 at the moment. It's likely to rise to 5.4 or 5.5% over the next couple of months.
But other numbers showed Australians are still borrowing to buy houses. The picture emerging on the Australian economy is mixed, so if the Reserve Bank cuts interest rates next month, it'll have more to do with what's going on overseas. The latest round of credit rating downgrades in Europe, which included the major economy of France, will put more pressure on global money markets.
Banks are likely to find it a little bit tougher to raise money in global markets, and they'll pass that along to customers, probably by not passing on in full the RBA rate cuts we expect this year.
In coming months, the Reserve Bank's interest rate setters will be second-guessing the behaviour of our banks and Europe. Philip Lasker, ABC News.